From one big company going public to the end of an era and another going private. Dell Computer, one of the leaders of the tech revolution, is going private after shareholders approved a deal by founder Michael Dell. The company, which once boasted a market cap in excess of $100 billion, is being bought out for a fraction of that, about $25 billion. Jackie DeAngelis was at the company headquarters in Texas for the vote and has more on Dell's past, present, and future.
After 3 failed attempts to approve a proposal from CEO Michael Dell to take the company private in a near $25 billion deal, Dell shareholders, including James Leach, finally voted today. The results are in the affirmative.
Well, it wasn't any different from what I eventually expected.
It's a big move for the struggling PC maker formed by Michael Dell himself in his dorm room at the age of 19. Once hailed as a revolutionary company for its direct sales model, Dell eventually topped Fortune magazine's list of America's most admired companies, but now is going private in hopes of turning itself around. But inside the meeting room today, shareholders had mixed feelings. Some were relieved, concerned that Dell's stock price could have faltered more amidst the uncertainty. Others worried that $13.75 a share undervalues the company and leaves Dell himself the beneficiary of any kind of comeback.
I've been a long-term shareholder. The price has been a lot higher, and if I've written it down this far, I could go all the way.
For those who want to keep the company public, their sentiment echoing the feelings of activist investor Carl Icahn, who has opposed the deal, even trying to fight it in court before throwing in the towel earlier this week, saying it would almost be impossible to win.
We figured that we can't win. It was just too difficult.
Shareholders in Icahn's camp felt the vote was skewed to Michael Dell's favor when Dell's special committee changed the voting rules after the last meeting, altering the record date and how abstentions would be counted. On a call following today's vote, Michael Dell said he was pleased.
This is a great outcome for our customers and our company, and I'm more than excited to move even faster towards our goal of becoming the industry's leading provider of scalable end-to-end technology solutions.
Well, today's decision is just part of Dell's next chapter. Now it's up to Michael Dell and Silver Lake Partners to not only devise but execute a strategy to turn the struggling PC maker around. And there are a lot of people out there who think it's very doable, and Michael Dell will certainly reap the benefit of that turnaround if it is possible. For Nightly Business Report, I'm Jackie DeAngelis.
Joining us now to talk more about Dell's next chapter is J.P. Eggers. He's professor of management at New York University's Stern School of Business. Professor Eggers, nice to have you back again. So you just heard Michael Dell saying that this is a great outcome, but what does he have to do to reinvent his company, to rejigger it so that it'll be a success as a private company?
This is going to require a significant change within the organization. Obviously, the decision to go private is kind of to move away from the eyes of Wall Street, to look at longer-term targets, and to really try and completely reinvent the organization from the ground up. There's really no more money to be made in the PC market, certainly for Dell at this point in time, and so this move to services 9 years after IBM sold off its PC division and made the exact same move in many ways will be a very difficult challenge that they're going to have to try and acquire new skills, restructure the organization, and build an entirely new system for the firm.
Does going private give Dell the best chance of a success at this challenge? And secondly, Mr. Dell has basically been there at the helm or closely involved with that company throughout this most recent period. Why should anyone think that he now has the right recipe to fix it?
Well, as far as why he has the right recipe to fix it, whether he certainly was the visionary that started us off in the first place, and he's put a lot of his own money on the table in order to try and make this work. Whether we believe that he deserves the chance based on that, it's hard to tell. But it's a very difficult thing to try and reorganize a business that's been so focused on the PC market while it's publicly traded, because trying to really disentangle itself from that space and move into a completely different area is a very difficult thing to do when you're looking at quarterly returns and getting pressure from analysts. Moving private gives them a chance to think longer term, to try and build again from the ground up this way, and it certainly gives them the flexibility and the privacy to try and take this thing in a new direction.
You know, there's this perception that you can be more innovative if you're a private company rather than a public company. We just reported now that Twitter is going to go public, so it makes you wonder, is that really true?
Well, so it's actually there's a lot of data to support the idea that companies become less innovative when they go IPO, when they go public in the first place. A lot of the original innovators within the organization tend to leave. They like to be in smaller companies. They can cash out with the stock options that they have. The pressure to move towards quarterly earnings certainly tends to diminish innovation. Certainly, radical innovation, more incremental things continue to happen. And for the most part, companies that go public then can use that money to acquire innovations in the outside market. There's much less detail to really try and say what happens when a company goes private, whether it gets the same benefit that a small startup does. But certainly the potential is there to focus on longer-term gains and to provide the kind of stock option incentives should the company later go public or get acquired again, that can actually provide the right incentive for innovators within the firm to be successful.
Is Dell's experience a lesson to other companies? That's question one. And number two, which you just sort of hinted at, do you expect to see Dell go public at some point way down the road?
Again, I'll go with the second question first. I mean, certainly there's got to be an exit strategy at some point in time. I would think that the vision would be to reorganize the organization, take some time and rebuild what the business model, and then yes, to try and go public again or to be sold off at some point in time. As far as a lesson to organizations, Dell is in many ways just the latest in a very, very long line of one-time leading iconic organizations that has fallen on hard times. You can look at Kodak, you can look at Polaroid, you can look at Blockbuster Video. In many ways, you can look at where Microsoft finds itself at this point in time and feel the exact same way. Mm-hmm. Many companies have been successful for long periods, and that success has actually led to their downfalls in many ways.
All right, certainly a story to be continued. Professor Eggers, thank you so much for coming on the program.
Thank you.
J.P. Eggers, he's professor of management at New York University's Stern School of Business.